Hello everyone, this is Jimmy Singh, broker owner of Supermax Realty, 519-933-2559. And in this short video, I like to talk about stats for the month of October 2022 for London St. Thomas real estate housing market. And I will give my opinion in this video how we can plan the next 12 to 24 months, especially if you're a first time buyer and investor losing money with the rising rates, and what should be the next course of action. So, folks, I studied the last 5 years data from our MLS sales. What I found is this last month, October of 2022, we have in total 504 sales that were reported. And if I check the last 4 years, in 2021, in October, we have 865 sales. If I see 2020, we had 917 sales in the month of October. If I go 2019, we have 928 sales. If I go 2018, we have 906 homes that were sold in the month of October. So October, a fall market is supposed to be a busy market, but if I see the stats, there's 40% sales which are less as compared to the past October. And if I see last 5 year average, the sales practically are down 48 to 50%. So the reason is we have significant rise in the lending rate, which has impacted the affordability of the first time buyers. And the other thing I have noticing is the supply or the inventory last year was just 0.6 months of supply, meaning less than 1 month supply on the market. So there was a lot more buyers, fewer homes on the market. And in October, we have 3.2 months inventory on the market, meaning if no new home comes on the market, it will take us more than 3 months to sell the existing inventory. And I'm also noticing lots of builders are shying away releasing new lots in around London St. Thomas market because they figure out they're not going to get that kind of prices which will make them profit. And the investor market is kind of dried up because line of credit and all those borrowed funds, they are not readily available and are getting costly. So if I see, what is the biggest mistakes people are making in the market, I see a lot of fear in the market. I see a lot of people sitting in the sidelines. It is understandable. So I think we have still a way to go. The prices will still come lower in next few months. And in short term, I see rates going up. So obviously, I see a little bit volatility in the market, right? But sitting on the side, folks, I keep, putting in my videos in last couple of years, nobody can predict the timing in the market, right? So you can't time the market. All you can do is if you're looking for a primary residence, you're renting, at 2,500 per month, a townhouse or a newer house, you just have to understand in 2 years, you will be spending $60,000 in rent. If you are paying $2,500 per month plus utilities, you will be spending close to $90,000 in rent in 3 years, and you have nothing to show for. Folks, yes, interest rates are higher, but as a new immigrant to succeed in Canada, the wealth creator is your primary home. With the low interest, yes, you can knock off principal faster and build your equity so you can, after a couple of years, go to the next property ladder and create wealth. But even in today's market, if you plan to buy your first home, maybe, this is not the right time, maybe in a couple of months you will be ready. Then when the right property comes on the market, if you're working with the right professional, they can get you a good deal and then you stay in the property 5, 6, 7 years, and you can have substantial equity, which is tax free. So the only tax free thing in Canada, folks, is your primary residence as of now. So always think like that. And always, there are certain quotes which are classic. For example, one of the Warren Buffett's classic quote is, be fearful when others are greedy, and be greedy when others are fearful. So if you see blood on the street, you see there's too much negativity, people sitting on sidelines, you should raise some funds. If you're financially stable, folks, in next few months, you will get tremendous opportunity to purchase the property in the right location, in the right school district, if you're looking for your kids. And again, if you're looking to upgrade from a smaller property to the higher market or luxury market, some properties are hit harder, so their prices are coming down. Yes, you might sell at little less than what is your expectation as per February March sales number, but the one bigger property you're buying, it probably have came down substantially. For example, I was checking out some numbers for October. Between 1 million and 1.5 million properties, in especially in London area. I'm not talking about St. Thomas, I'm not talking about Strathroy, I'm not talking about Middlesex Center. I'm just focusing on North, South, East London. Only 17 homes were sold in 30 days in October, right? And if I go 1.5 million plus properties, only 4 properties were sold. And if I see single family homes, let's say for example, less than 500,000, 36 properties were sold. Folks, in February, I think it's kind of impossible to find a detached single family home in London for $500,000. Everything was going 100,000, 150, 200 over the asking. That was, what's happening a few months back. And then if I see 500,000 to 750 category of single family homes, 89 homes were sold last month in October. If I go 750 to $999, 41 homes were sold. So if you see all along, guys, there are still people out there buying properties. They still have, family requirements. They have lifestyle changes. There's always be sales. Sales might come down with the qualifying rate, because right now people have to qualify probably 7 plus 7.4% to for stress test to buy these properties. But most people should know that these rates are coming. So if I go like a couple of years back, banks though were offering you 2% rate, but they were stress testing you at 5.25, because they see that this low rate environment globally. Let's say you talk about UK. So there was news today that United Kingdom has increased the lending rate. Yesterday, Federal Reserve raised the rate 0.75. If you see Australia, New Zealand, so it's a global phenomena. When pandemic happened, they provided liquidity in the market. That liquidity can make the economy keep running smoothly. Now they are tightening up. They want the demand kind of dry up. They want job market, the strong job market to slow down, so people spend less money. So they want to now take the money from the market. And even in last video, I talk about Canadian dollar versus US dollar, how weak our currency is getting. And then all the purchasing power, we have to spend whatever we are importing from US or out of this country. All these commodities we have to pay more, and the cost of living will keep going higher. So if you're sitting on sideline, you're looking, okay, my refinance is 6 months down. Folks, the chances are you're going to pay way more interest rate in 6 months what you can lock right now, or it's going to be tighter for you to qualify. Second thing I want to talk about is the biggest mistake I see is some of the folks, they're looking for deals and they're thinking like a major renovation for flipping. Friends, this is not a market, for a major expenditure on a property. You might get stuck. It is still a declining market, right? And let's say you apply for a permit for a basement, you have to you want to put third unit or second unit in a dwelling. You apply to the city hall, and they can take long time, and you will burn through your money pretty quickly. So be very, very mindful. Yes, you can do some cosmetic flips, because as I said, the families are still buying. So if you just have plain vanilla property, you just do lipstick makeup, do a little bit fresh coat, you want to put new flooring, you maybe put new appliances, still those properties will move, which are starter homes. So be very, very careful. And I think some people are getting excited a little too soon, to jump for major renovations. Another thing I want to talk about is, I get calls from a lot of investors who bought pre-construction bigger properties, which are kind of expensive price point, and they now, feel they're kind of stuck because they're hopeful eventually market will come up in next 6 months. They're holding tight, maybe renting short term, and with the rising interest, guys, here is my thoughts. They said you want to die either with 1,000 cuts or you just get a one cut. Meaning, if you are still in equity, let's say you book a pre-construction house, maybe 650, one time it reached 1.2, right now it's kicking around 950. Just call it a day. If you're losing like $1,000, $1,200, and you have a bunch of pre-construction homes you closed in last few months, and you're really concerned that you'll be out of cash pretty quick. So just call it a day. You know what I mean? Take your profit and move on. There will be more opportunities. But if you're a long-term investor, you can sustain for next 5, 10, 15 years and want to pay it off, that's awesome. So those are all the things, guys, you have to consider. And obviously, if you're you want your options, you want to know whether it's the right time for your particular situation, give Supermax team a call. You can call me directly at 647-961-2639, or you can visit my website www.supermaxrealty.ca. So, and thing I want to talk about now is about investment, in the rental properties. Guys, as investors, I know I've been an investor for last close to 19, 20 years. I own a bunch of properties in different cities, and I treat my tenants with utmost respect, and I treat them as my clients. So if they are paying off your mortgage right now, a lot of people are over leveraged. You should be grateful. Treat them with respect. Build your relationship, so when the time get tough, these tenants will bail you out. All I want to see is respect for people. I see sometimes blogs, people are bashing, people who are renting and they look down on them. I think that is not the way. If new immigrants are not coming to Canada, if students are not coming to Canada, trust me, a lot of people who are over leveraged with rental properties, getting money from basements, they can't afford those properties. Number one. Second thing, if you want to improve your rental properties, maybe put a little bit of money on new appliances, throw a fresh coat of paint, maybe change the flooring to increase the rents. Yes, to a certain extent, it is doable. But if it requires a major renovation and you can't move the needle too much in the rental, I think just wait it out. Just, if everything is functional, just wait in this high inflationary market. Because what happened is in January, February, I saw the real estate market, just like a balloon filled with the gas up, meaning like, going up with the inflation, but somebody poked a needle. So it was also deflation. So I see both things. It's rising, but it is leaking some air. So eventually, when the whole air runs out, it has to fall down, right? So those things, guys, you have to take care. A value add in the rental property, if you want to make a basement apartment, key for long term. Student rental demand is crazy in London, whether it's close to Western, Fanshawe. I get calls every day from a bunch of students looking for bedrooms. So yes, there's an opportunity. You can improve the rentals, maybe put a bed, put a table and chair, maybe provide free internet. Those are the all small value adds that can give you good cash flow and help you sustain the properties. So all in all, guys, just wait till March or February, I think by that time rate hike should be over, and hopefully correction and all those things will be settled down. But again, it's very hard to make a prediction. I'm not in a business to make any prediction. Honestly, nobody even knows. But plan your moves wisely. And if you're looking for a specific property values, because our real estate boards come up with the stats, median price, average price. So those number guys are not what you call, we can't take those number on a face value, because this month they said the average price in London is $640,570. That doesn't mean you can buy in Sunnydale or Talbot Village a nice house for that kind of money. And market is always local. So if you're looking for a specific location or house values, or you're looking for certain complete picture of the neighborhood or a community, always consider working with a local realtor who know what they're doing, they are experienced, and they can guide you in the right path. Hope it helps. Till next time, this is your local realtor, Jimmy Singh, broker owner with Supermax Realty. Talk to you soon next month. Bye-bye.